Bitcoin is what is up, and I'm Colby, the Bitcoin miner plug. Today, I'm super excited to jump into this question about Bitcoin mining through bear markets that I got over at the Proof of Workshop. If you're interested in learning more about Bitcoin from the full-time Bitcoin miner's perspective, we've got a lot of heavy hitters in the Bitcoin mining business over at the Proof of Workshop. Simon had a great question over here at the Proof of Workshop where all we talk about is Bitcoin and Bitcoin mining. He says, how does Bitcoin mining typically work during bear markets? He's going to get his first two machines online, S21 Pluses, and congratulations to you, my friend, for starting the Bitcoin mining journey. I'm really excited for you. And this question is great because you should be asking about the bear market. He says, from my research, mining difficulty tends to go down, but so does price in a bear market, thus becoming less profitable dollar-wise. Sounds like he's referring to hash price, where mining rewards are measured in dollars. And he asks whether it's the best move to just hold the Bitcoin and potentially sell in the next bull market to buy more and newer miners long term. Thanks for that question, Simon. So, couple data points I want to run through. This is by no means a comprehensive full answer, and largely because I don't have a crystal ball. And yet it's a great question that we should always be reviewing and asking ourselves. Let's start by looking at hash price, because hash price is basically how miners measure their revenue in dollars. Why? Because miners are looking to stack Bitcoin. Most miners want to accumulate Bitcoin at a substantial price advantage through efficient mining, but their costs are generally in dollars. So most miners are going to look at their top line revenue in dollars, and that's the Bitcoin that they're mining. And then they're going to look at their costs and figure out their bottom line. If we look at a case study, we can look back and study what happened in the last brutal bear market, because the last bear market, a lot of miners went out of business. A lot of miners had to unplug because of the Bitcoin price going down, but also difficulty went parabolic. When you say difficulty tends to go down, that was not the case. Bitcoin difficulty actually went freaking parabolic, and that's why a lot of miners didn't make it. So, last bull run, Bitcoin went up hundreds of percent. Difficulty looks flat here, but it was also going up. Then we had the great China mining ban, which resulted in difficulty massively going down. And that was a great time to be mining Bitcoin, because when China banned their hash power, all the other hash power got paid that much more Bitcoin. So not only in dollar terms, but also in Bitcoin terms, they were earning a lot more Bitcoin, and hash price went freaking crazy. As you can see here, went bananas. But since then, if we look at the top of mining revenue in October 2021, it has only trended down. This does not look like a bull market, does it? And why is that? Because Bitcoin price went from 16,000 up to 110,000, but it doesn't really appear when you look at mining revenue. So if we look at Bitcoin price over difficulty, you start to see that picture as to why would miners not be getting paid like they did the last bull run yet. And that's largely because difficulty has went parabolic from the last bull run. Through the bear market, difficulty relentlessly increased. So difficulty at 22.67 T at the top of the last bull, we entered the bear market in Bitcoin, and difficulty went from 22.67 or thereabouts to the current difficulty, we just hit a new all-time high of 100, and where are we at? 130 or something. Bananas. This business is bananas. So, all-time high, baby. We just had a difficulty increase a day or two ago, and Bitcoin mining difficulty went up a massive 5%, hitting new all-time highs. Bang, bang. So what am I getting at? Through the bear, the network only grew. Miners were mining less Bitcoin because of difficulty increasing. If you look at hash price in Bitcoin terms, now they're mining less than a tenth of that in Bitcoin terms, not dollar terms. So this is something that you're going to want to get as a Bitcoin miner, looking at revenue both in dollar terms and Bitcoin terms, hash price and hash value. I'd like to also point out that as the network grows, it becomes more difficult for the network to grow. And that's because mining efficiency gains are becoming less. Further to that, it takes more infrastructure to grow the network. In other words, if a gigawatt of infrastructure is added now, it has less of an effect than if a gigawatt were added in 2021, when the network was something like a fifth of the size in terms of hash power. It's interesting to point out that we also had the biggest difficulty drop since that Great China mining ban that happened in the summer of 2021. We had the largest difficulty drop since then, just recently in June of 2025. 4 years later, we had the largest difficulty drop, but overall, it has trended up since throughout the bear market. That's tough on miners. Miners are long Bitcoin, short difficulty, but it's important to keep in mind that difficulty will continue to trend up. The miners have only come down in price since the last bull market. The most efficient machines, half the efficiency of the latest generation ASICs, were trading for over $100 a terahash. And since then have only come down in price per terahash, and they've only gone up in efficiency, of course, as machines get more and more efficient. This right here is worth screen capping. I can drop this in the proof of workshop because this is one of my favorite ways to look at mining and mining efficiency, hardware efficiency, is if you look at your hash cost and your break-even power cost. And what this is doing is looking at hash price in dollar terms, comparing your revenue to your efficiency. If your all-in cost of power is 8 cents, you can see where your break-even hash cost is. It's good if hash price is higher than your hash cost. It's bad if hash price is lower than your hash cost. To show an efficient machine, let's look at one of the most efficient machines, which is a S21XP. So an S21XP at current economics has a cost of production of approximately under $60,000. The margin on the Bitcoin you're stacking is the difference between your cost of production and its worth at the time you receive it. And that's not factoring for any potential appreciation if you just hodl those rewards, whether you're hodling all of it and funding your operation with other money, or if you're selling your Bitcoin to pay for your OPEX and you're just hodling the difference, which is hopefully positive and in the black, and hopefully you're not operating at a loss. But if you're running an S21 XP, your break even currently is about 15 cents a kilowatt hour. So if you're paying less than 15 cents a kilowatt hour, you're making money on that machine. And if you're paying more, then you're not. To give an idea of, oh, well, what if we enter a bear? Well, it basically comes down to what's your mining revenue, hash price, and then what's your hash cost. Because no matter where you're mining, you're going to be subject to hash price and mining economics in terms of miners are going to make the same revenue per terahash, but what makes the difference between successful and unsuccessful miners is their efficiency, both hardware efficiency and operational efficiency, which determines their OPEX. The hardware in S21XP is going to be pretty much the same hardware efficiency anywhere it is. The difference is, what are your costs? How efficient are you at keeping that miner online? And then what is your costs in terms of power cost and other costs to operate that machine? So if you're all in for, let's say, under 8 cents, and the break even is about 15 cents, then you are operating that machine somewhat efficiently and hopefully very efficiently. As you can see, that could look like you're stacking Bitcoin for under 60K with that machine currently. So if we enter a bear market, how bearish are you? I can't say how bearish or bullish you are. If you're mining Bitcoin, I assume you have a pretty bullish perspective and want to capture the upside of a bull market. For example, the people that were buying miners before the last bull run in mining economics, not just Bitcoin price, but mining economics, when fees spiked and Bitcoin price spiked and difficulty could not keep up with the bullish tides, so to say, the bullish factors, the bullish elements, the bullish powers that be. Fees spiked, Bitcoin price spiked, difficulty went up, but it could not keep up with Bitcoin price because Bitcoin price went from 10K to almost 70K. Difficulty, it's real world infrastructure that you can't just 7x within a short period. It's a great time to be mining Bitcoin as we enter more bullish conditions that result in better mining economics. The benefit of a bear market is you can pick up top efficiency equipment at a heavy discount relative to the bull. Looking at the miners, they were trading for well over $100 a terahash. These days you can get the most efficient equipment for under $30 a terahash. And they're twice as efficient and they're putting out more than 2x the hash power. It was a terrible time to be buying S19j Pros for 15 grand at the top. It was a great time to be buying them throughout the period which preceded the bull market and get them online and hashing efficiently before market conditions became favorable to miners. The bear market is when to optimize one's efficiency and stack efficient hash power if you're bullish and if you want to partake in the coin mining marketplace in a bull market. And this is interesting to me because this still looks like a bear market to me. And I'm bullish. So, Simon, I hope that answered part of your question. I think it largely comes down to timing. I see the opportunity of Bitcoin mining through a bear market. You want to be picking up the most efficient equipment at a discount and continue stacking Bitcoin as efficiently as possible. Again, hardware efficiency, but also operational efficiency, and hoping to keep your hash costs down for when hash price comes down during the bear market. Bitcoin mining difficulty tends to always go up historically speaking, and I believe that will continue to be the case. That means that mining revenue gets consistently compressed in Bitcoin terms, and if Bitcoin price is also going down and not keeping up with difficulty, then Bitcoin mining revenue is getting squeezed also in dollar terms. So you have to be cautious about your costs of mining Bitcoin, especially as revenue gets compressed. We want to make sure that you're doing everything possible to set yourself up for success, to efficiently mine Bitcoin. That's the conversation at the Proof of Workshop. Free lifetime membership if you want to mingle with full-time Bitcoin miners, learn about Bitcoin from the mining perspective at the Proof of Workshop. Of course, that link is going to be in the bio. Let me know what you think. Is there still opportunity to mine Bitcoin even in a bear market? Do you see opportunity of picking up efficient ASICs now? And are you still bullish enough to mine Bitcoin? Let me know in the comments. If you liked it, give me a thumbs up. If you didn't like it, give me a thumbs down, and I'll see you guys on the next one. Peace, love, and Bitcoin.